Jonathan, happy to see you here. Really glad. I think we had a great panel this morning. I think it was sometimes people say to me, "Oh, how do you know so much about the industry?" And I said, "I've been moderating panels, and I ask the questions that I want to know." And it's true. Some of the things, especially because I owned companies before in the sector, I know the business side of things. But it's been, I think I kept a small company in Costa Rica till 2015 that I sold. So and it's still that longing, but I said to myself, no, I'm not gonna, it's not my time anymore to invest in companies in the future. And sometimes I see potentials and opportunities, So this is more of a question for me than the question here. But what was that inspire you to say, okay, PayFuture is needed? What do I want to solve? Where I see the niche, because I go into you start with niche, you expand, but sometimes you see the clarity, the clarity in what I have to do. Not sometimes comes from niche. That I wanted to.
So it's a very good question. So I'm a trouble solver by nature. That's what let's say excites me. So for example, even in my hobbies, like I need something challenging. And professionally, I'm a CTO. So I like software, I like to build software, and then from software infrastructure, and I like solving problems. And most of my professional life, first it was into airline solutions and oil and gas. And then later it was into a number of other industries like game of skill, pharmaceuticals. And I was realizing that obviously everybody has one common denominator, which is taking in payments.
Payments, yeah.
And if you think about it, let's say it shouldn't be that difficult. A person wants to pay for something, he has a method of payment, so just give him something to pay with and have a good day. But when you start looking at where are these people coming from, how much are they allowed to pay? Are they even allowed to transact that in their respective country? And it was becoming a bit of a nightmare. And so I said, okay, there must be some solutions out there, let's say, looking at it. And everybody claims, or many people used to claim, they do global payments. And I love to hear it, even in Money 2020, everywhere I go. We're a global payments company, one API. I think there are so many buzzwords, but when you start, lifting the corporate veil, nothing works, or nothing works properly. And I said, okay, clearly there's an opportunity here. I said, so let me forget, let's say, the other sides of the business. Let's focus on solving payments. And again, there are many payment companies which are focused on, let's say, the rest of the world, good infrastructures. So Europe, saturated. Asia, saturated. America and Canada, in their own way, saturated as well with their ACH and etc. But we said, okay, what about the emerging markets? Here, if somebody has any type of merchant, you're selling clothes, you're saying something low risk, medium risk, whatever it is. Don't you want to tap into, let's say, countries which have, 5 billion in population, it's obviously going to bring in the money. So why aren't we going there? So we said, okay, let's focus on payments, but let's focus on emerging markets only. So we establish ourselves as dominant in those areas. And then once we prove to the world that we can do all the complicated stuff, and then we'll continue doing all the other countries as well. So that is what sort of excited me about solving the problem. And you can only solve it if you're on the ground, working with merchants and suppliers on the ground, and you can give people an end-to-end, let's say, solution. So once we got that right, and then we continued with all the other stuff. So that's how we got into PayFuture.
Yeah, but it's interesting because it's just one way of looking at things. It could be done, I know companies that started doing some easy corridors, let's say US, Philippines, Because it's a big pie, and even if we have a small pie, it's big enough. Same thing in US, Mexico or something like that. And then they expanded, you went the other way. Okay, where is it hard? Let's solve it, and then we take it from there.
And the reality is, it's not only about like the making the money side of things, which obviously is important because it funds the rest of the business, but it's also what will differentiate us at a show or at a conference. So, for example, we can do SEPA payments all day long. We can do instant, target to transfers. We can do SWIFT all day long, no problem. And if we don't do it, we'll get a partner that can do it. But it's fine. But there are many. So if we're promoting to a merchant, I need to, give this merchant something that he is not getting today from everybody else. And if I'm only offering something that everybody else is offering, then what is my differentiator? So we needed to find sort of that differentiator. And I think that is why we decided to go down that sort of those type of markets. And not because of jurisdictional issues or whatever, it's just that people go down the normal markets because they say it's big enough, there is enough for everybody, so let's go that way.
Yeah.
But you will not be remembered. You are a number.
Yes.
And
maybe that's what you want, good for them, So we, because we're talking about merchants, companies, enterprises, organizations. Yes, we know that, especially with cross-border payments, they want to look at a different way of providing a more integrated way of payment, and this is something that I think you guys have worked on. Combining the treasury functions, the virtual accounts, the payment side. Talk to me a little bit about that. I mean, because this is also a decision you took. We need a solution that differentiates us, but it's a solution that companies are going to take as, this is what I want, because it integrates A, B, and C, instead of doing A here, B here, C here.
And I think that's a very interesting topic, very vast. I like to sort of summarize that in, let's say, 4 buzzwords that we use internally in the company.
Okay.
So I like to say sort of that, or we like to say that we like to go for depth rather than reach, as in we'd rather, let's say, have 5, 6 sort of countries, jurisdictions where we're absolutely the best in, and we have every corridor possible, from local payment methods to local connections, settlement, the whole works, as opposed to saying, I can give you 86 countries and they sort of maybe work, maybe not. Some work, some not, some will go off. So we like depth as opposed to reach. And once we're like deep in the market, and then we say, okay, now we afford to do something else. And the next one is, we like to use the words collect and connect.
Okay.
And the reality is that there are many instances where companies or in the market, it might be easy for me, let's say, to connect a merchant to an acquirer on the ground. So there are many, let's say, again, more buzzwords in the market, which are local payment methods, alternate payment methods, QR codes, pay by telecom, pay by this, pay by that. It's fine. But and then the trick is, we can help you get the merchants. We can help the merchant get the clients to pay, but you need to have a company on the ground, a local director, because in the country, once the money is there, the money has to stay in country, etc., etc. So when you're looking at it, if you get the connect part, but you're not allowed to collect it back to HQ, or you're not allowed to get the settlement back out of the country, then you have like half a solution there.
Okay.
So that is how we look at it. We say, no, every, let's say, country that we decide we're specializing in, we have to do collect and connect. Now, if we can do it all ourselves, all well and good. If we can't, what do we do about it? And what we like to say is, let's go through the transaction journey. Talk to me like a baby. I'm going to put like steps, and I want to see the flow of funds. Here is compliant, Here we have a question mark. This is compliant. This we can do with our license. This we can do with our license. Here we have a gap. So do we have a solution? No. So how do we solve that part? And once we solve it, we say, do we get a license? Do we use a partner that has a license? Are we compliant end to end? Now we have a product. And then we package it and we sell. So that is, let's say, the mentality. So when we're talking to a customer, like the first thing that we say is, look, moving money is easy. It's doing it compliant and legal, which is the tricky part. And that is what we have to get right. So let's draw the whole plan. And once we know that it can be done and that it ticks all the boxes of any audits, etc., because no one likes trouble, everybody wants to make sure that they are above board. Not knowing the law is not an excuse, because you need to always keep abreast of all the different legislations. And then you have a product.
You know, I'm going to tell you an anecdote just because this was a seminar for regulators, and you remind me of that because they said, because I drew a close approach to regulators, especially the states. Some time ago, I was part of even in the Industrial Advisory Council, even as an independent, basically as a consultant, and I would say, you know, look, even though I know payments, and I go and I always take this paper and says, show me the flow.
Show me the money.
You know, and there is really two flows, I would say to them. One is the flow of money and one is the flow of information. And the flow of money is not only flows, it's who keeps the money in the flow, you know? And because sometimes it's just information, but the money is not moving anywhere. So and for the regulator, that's important. Where is the money?
100%.
You know, and it was so interesting because you were doing the same thing, and I just told them, look, anytime there's a fintech that comes and you don't know what to do with the license, you don't understand their business, the only way is to just sit down and says, show me the path of information.
Very, very, very important.
Yes.
And because one interesting point on that is, it's true, it's like, where is the money sitting? Who is safeguarding it? Yeah. Maybe somebody is using a partner to do this, but the money can't sit there for more than 24 hours. Otherwise, you need another license for that, because now you're safeguarding and not transacting.
Is it passing
so there
account?
are so many little bits and pieces, and that is just on the money side. But what you're saying is, I think, is very important, is what information is moving around. Because when we're transacting, for example, maybe one of the, let's say, prerequisites is we need to KYC, for example, the beneficiary or the recipient or the intermediary or whatever. That's fine. There are many companies specializing in let's say, that side of the business. But am I even allowed to verify that person? Because to verify that person, if my license is sitting somewhere in Europe and my recipient is in India, for example, and this money needs to get to that recipient. So I need to be compliant on this side of the world, because I need to tell my ECB, the European Central Bank regulator, we did the verification, I checked that guy, etc., everything checks out, blah, blah. On the Indian side, I need to answer to, I was not supposed to take that data out of India to verify that person. So now I'm stuck. Can I verify him? But I should. But I'm not allowed because I can't get the data out. So what do I do? So there are all these little intricate things.
That's very interesting, you know? Because that's also, you know, it's information. It's not the information about the payment, but who it's managing the money. Who is on one side, who is on the other, and sometimes, of course, there's an intermediary. Sometimes. So now you know, Europe especially been talking about virtual IBANs and multi-currency accounts. They're becoming a little bit more mainstream. And as you said, some work, some don't really. It's more, some are more marketing than what they really are. But do you really think that this sort of tools help businesses move money and especially if we talk about business payments, it's also volume, and volume is high payments, high value payments, and not only that, then you come with the reconciliation side of things. so which we come from businesses that reconciliation was done someplace else with an Excel, and
many still are, I think.
Yes, still, yes, for sure. Tell me a little bit about that.
So the concept of let's say virtual IBANs, I find it very interesting. To be fair, it's been, let's say, even in Europe, we've been like at it for a few years in a number of companies that I owned and I ran in the past, and we're replicating that sort of structure. And the why is important. So again, like as a merchant nowadays, if anybody is, let's say, has that small entrepreneurial spirit and wants to launch a business, whether it's small or big, with digital goods or physical hardware, whatever it is, ideally they would like to be able to sell to the planet. They want to sell to anyone. Okay, so if they're hardware goods, depending on where you're selling it, you might have to have, let's say, some certifications or tax or duty. Okay, but they want that the whole world potentially becomes a customer. So from the merchants, very easy. And if they had the option to say, hey, you know what, if I'll pick one company, just enable any payment gateway, whatever you have to do in the background, do it. I get one reconciliation. Who paid me? Did they settle? Did they not? Did I get the money? Give it to me. How it's happening in the background, the merchant should be oblivious to it. Though what that means is, let's say, what we like to sort of use is, we like to use the concept of a payment network orchestration layer. But orchestration layer has been used and abused, I think, in the industry. So what we like to say is a payment network abstraction layer. So the merchant, for example, today, and I see many companies doing it, even PayPal, for example, if you go to PayPal, you open an account, they will give you PayPal, but in the background, they'll tell you, would you like to enable credit card with Visa, MasterCard, JCB, etc.? Tick. If you're selling to Brazil, do you want to enable PIX? Tick. And you're selecting all the different payment methods that are happening. So from a merchant point of view, commercials aside, for example, PayPal is a good option because they go there, they integrate once, they have one merchant agreement, and everything just flows. Now, for a merchant that is selling maybe something online, etc., it might be a good option. For other companies that are more complex, that are doing, for example, salary remittance, or they're collecting, for example, different stuff, or they're in travel and their business is global, maybe PayPal is not the right option, but the concept of how it is happening needs to still be the same. Because reconciliation has to be once for the merchant, and all the heavy lifting has to be done by the payment aggregator. That is the value add that you give to the merchant. So when we go, let's say, with the virtual IBANs, why do we do it? Because we're giving you one solution. In the background, there are so many moving parts, but we can hide it. We can, let's say, abstract it from the merchant. The merchant sees PayFuture or Company X or Company Y. There are other companies doing something like this. But in the background, we're doing all the heavy lifting. We're doing reconciliation with X amount of providers. Everybody has their own format. These give you, for example, not even some of them give you a reconciliation in Excel. Some come in a CSV format. Some give you an SFTP transfer. Some give you an API. Like, it's a mess. There's no standard at all. But we believe that we are the experts in this scene, and even we are crying sometimes to actually deliver this. So imagine the merchant. Mm-hmm. So that is, I think, where the opportunity lies in the payment space.
Good. It's interesting because what used to happen and still happens is you like to build your own puzzle. And as a consultant, it's sometimes what I see, and I say, "Oh my goodness!" But you're not and I see it. Sometimes I don't say it, but you're trying to build your own puzzle when there is others, maybe a single player in some cases. Some companies feel, well, single player, I'm just putting too much of my
In one basket.
one egg in one basket, so I prefer to have this and that. So that comes in, like anything in life, has its pros and cons. So because you're working on those cons to convince, tell me a little bit of how you know, what is your ideal customer, and what is your ideal solution for that ideal customers? And in the services you provide, you provide other companies to use your services to their clients, and how does that work a little bit?
Today I actually had a few interesting similar questions from people that were seeing the panel and then walked up and like we're having a conversation. And they said, so how do you compare yourself to company X who sort of are doing something similar, for example? Like, do you see them as a competitor or whatever? It's a funny thing because, like, I think in our space, yes, you can, in the English word, you can say it's a competitor because, like, maybe we're going to the same events and we are pushing our services to the same, let's say, audience. But to be honest, like, I think we see everybody as a partner, or potential partner. Good. Even if we are looking at solving the same problem, even in the same jurisdiction. Because I might be doing it one way, on land, etc. That person might be doing it in the same thing, servicing the same customer. I might have a problem tomorrow, or they might have a problem tomorrow. So today, he is my plan B. Maybe if my plan A stopped working because some bank went down or whatever, exactly, I can move traffic to him, but I don't impact the merchant. I will carry that. And tomorrow, I might be plan B for my competitor. And secondly, it is impossible. Number one, they say in English, like, no man is an island. So it's impossible to try and do everything yourself. And for example, we have some countries in Africa where we know that we are absolutely the best in and out. But does it mean that we do all of Africa, for example? No. And we have no intention of doing it because it's too costly and we can't justify it. So why? So when the need comes in, we say, you know what, we're working with this company and they are amazing at solving X, Y, and Z. Fantastic. We'll use them until we justify the need to build. If we see that at some point in time the volumes went up to justify it, then we'll go down that path.
Look, and I understand that very much because, I mean, CrossTech as an event, not as in the consulting side, but as an event, that's why we exist, because it's competition, but it's collaboration at the same time, and we see it with many of our sponsors, you know, that compete with that, but they collaborate in certain channels or certain corridors, don't in others, you know, and it's, for me it's very interesting to see because we go back to sometimes you don't need to build everything from zero, you know, I mean, if it works well, you know, and it's good because I see a lot of the startups and fintechs much more thinking that way, you know. I see this. I can use you for this, you for that.
It's Lego.
Yes.
Lego.
And yeah, and they can build. I mean, if they have a clear view of the path, they can go to market
100%.
Pretty fast with less money and less risk, and just I pilot this, I pilot that, and that really I've seen it in payments, and that is how dynamic this industry is because it is like that.
Even I think on let's say on valuation, on valuation and on, let's say, on the funding market and on the investment side, etc. It's sort of the difference between having maybe a founder who has an idea, put no money into the project, comes up with a plan, you know, hopes it works, you know, and then goes to ask for money for it, or build something very fast, prove the concept, go to the market, start getting feedback, then if it justifies the growth, then go and say, hey, look what I've done with nearly nothing, now help me with this and I can grow. So, you know, so it gives the same thing. It's like, instead of like trying to develop everything, you say, look, I know my partners. I know who I can tap into if and when the need comes. I don't need to do everything from day one. Everybody is a potential partner, and I am a potential partner for everybody as well. Because when I am buying in, I tell them, hey guys, by the way, on 1, 2, 3, 4, 5, 6, 7, I'm the best, no doubt about it. Check me and try it out. But I also need all these services. So when you need these, I'm a good plan B for you.
What are your major I don't know how to ask this, whether channels, let's say destinations, which is easier, your major markets where you tell me that you have specialized because you have found those emerging markets that needed your solutions and you were able to find that layer where you fit. Just give me an idea of that.
Yeah, for sure. So like as PayFuture, our focus started and is still, let's say, on emerging markets.
Yes.
But originally it was, so we started off as a gateway only, as a technology gateway.
Okay.
So helping our merchants connecting with the local providers.
Okay.
And then we started getting, for example, like we went down and we got an EMI license out of Europe as well. So we got regulated and now we're a regulated electronic money institution. So before we were only involved in the transmission of data.
Okay.
And now we're involved in the flow of funds as well.
Okay.
So we have more control over that. Because it's not only, let's say, merchants who want to bring their business into Europe and customers there, but it is businesses outside of, let's say, the emerging markets wanting to tap into the emerging markets. So at least now we're helping it on both ways.
Okay.
So that's how we're going for the depth part.
So Europe is like the hub.
Correct.
In a way. And where are your legs mostly being built? What are the markets, those emerging markets where you've seen the stronger growth of your services?
Yeah, for sure. So as you said, like the European side is the regulatory side.
Okay.
So that is, let's say, all the regulated, entities need to be of a certain level, pass all the KYCs, and that is on the, let's say, on the digital money side of things.
Okay.
Now we're exploring other jurisdictions even to make sure that we can go down the stable coins route, etc. So we have a few licenses incoming in play. In the emerging markets, we have, for example, India. We're very strong. We have Egypt, we have Nigeria, we have Pakistan.
Egypt too?
Yeah.
Good.
So, and those are markets where we're helping, let's say, people on the ground acquire products and services outside of those countries, and we're helping merchants outside of those countries tap into that flow as well.
Okay.
So the important thing is having both the connection and the collection being repatriated into their banking accounts, etc.
Okay.
So that's how we're bringing the puzzle slowly together.
All right. And last question will be: where do you see the biggest opportunities in this market on where you or have you specialized, and how those business partners, for example, that are interested in Egypt and they don't know how to tap that market, but they feel that they have, I don't know, maybe a market in the US or in Canada, etc. How do you see those opportunities in your experience so far?
I think the opportunity is in speed of settlement.
Okay.
So that is particularly why I'm loving this conference, to be honest, because a lot of the panels are touching on the cross-border, let's say, settlement, and I think everybody's understanding and realizing the problem and where it is going. So that's why I like to say, for example, even when it comes to stable coins, in my mind, stable coins is not the future of crypto, it's the future of settlements, because it's helping, and we've seen it in the news with big boys in the industry. Yeah. They're using it to settle and help their net settlement of treasury, how much they keep here, how much they move. So the money is not actually moving anywhere. It's still sitting in the different places, but they're using balance movements just to counter each other without having to physically move anything. So that's super important. And secondly, as a merchant, you know, in the past, if we go down, let's say, the schemes, you're going to find a lot of, okay, if you're transacting, then we're going to agree, we're going to keep 0.8% for 60 days because you might get a refund and a chargeback and this, and the reconciliation becomes a mess, and there has to be multiple reconciliation. This transaction had to be released 90 days after here. It's not good, you know. When you go down this route, where we're talking, the industry in these emerging markets, we're used to T+5, T+6, T+10 days of settlement. And the complete big industries, we're not talking only digital services, we're talking esports, we're talking so many. And this is not even the high risk. High risk is a completely different thing. This is like normal, low, medium risk, let's say, businesses. So when you start looking at sort of where the world is going with settlement, it is the process. How to get that T+0, T+ immediate, T+10 seconds, you know, that is what they want. We sold, we got, boom, next, we move on.
Yeah.
So
but you know
I think
how
that's
we
the
got
part.
there because in a way, banks needed the money to stay in their hands the longest possible.
And stable coins, honestly, in my mind, it's an extension of the banking rails. It's never gonna. I don't think it will replace it completely.
No.
People like the physical
I know.
movement.
I mean, and some banks are emerging as stablecoin banks because they are payment banks more than other things. It's not that they're not going to do the other things. But
exactly.
When you talk to a stablecoin company and it says, well, if you have some money sitting around, we'll give you some, they don't call it interest, you know, you stake your funds.
Or yield it, or this, or
staking,
this.
okay, fine, you know, and even with my wallet, with the Bitcoin that I have and Ethereum, okay, I'm stocking what I have just to get some percentage
Exactly.
more. So it is almost this. It is the same business with different buzzwords. You know?
I think we're living in a very exciting financial transformation time, to be honest.
I do too.
There's a lot to learn. I love listening because, you know, you say, actually, I didn't look at it in that way, but this is good to.
Yes,
so it's a very nice
Definitely.
time to be.
Great meeting you. Please come back.
With pleasure.
And you know, I wish you the best.
Super.
I mean, you have as a business person, you have the right mind in the right place. And look, sometimes I meet with people from the data world, the CTOs, and sometimes I says, you don't know enough about business to be able to make it. But I mean, you have the big round up. So
It was a pleasure.
it was a pleasure. Yes, thank you
100%.
very much.